All right, so this is the live chart, AUD/USD 4-hour chart, and we'll be doing a back test. Basically, this is not the live market, this is simulated. So we want to look at all those things that we discussed in the previous video. We want to look at how we can take a buy, take a sell, how we can identify our structures, and so on. Also, how we manage our trades, how we stay in, get out of trade. So just listen carefully to whatever I'm saying and try to learn. So the first thing we want to do is, from this place where the market is, we want to go to the back. You want to look backwards and identify the structures. You can first of all ask yourself, are we going up, are we going down? As you can see, currently the market seems to be going up. So obviously, if it is going up, there is an uptrend somewhere. So we want to identify where we draw our uptrend line. So you can see here there's a low, the market went up, came down, went up. So this market went up from where? Went up from here. You can see the last point here. Market dropped down, went up, dropped down, then it's going up. So I'm going to look for my trend line and draw an uptrend. That's the structure that I have in front of me. It's very simple, straightforward. Just draw my uptrend, that's all. Now whenever you draw trend line or anything, the market is not always going to be smooth. Like this bump that we have here doesn't mean, just we have tried our best to draw it, and you can see I'll move to the upside. So what am I expecting now? I'm expecting the market to break this trend. Okay, you can let me explain something. The market will either move up or down. So currently the market is moving up. When it is tired of moving up, it will move down. Now here's the thing, the market can keep moving on. I will not panic, because I just came into the market and something have already started happening. That thing that have started happening, I was not there when it started, so I can't just jump in and join it. I don't want that. I want to be there when the market have started moving, so that I can be in the beginning of the market. If you can join a trade or a market movement or price movement in the beginning, you are much more likely to have a higher percentage of risk to reward. You understand? Because you are in the beginning. So if the market will move very well, fine. If it doesn't move very well, fine. But now something has already started happening. We already have a low, a high, a higher low. We're seeing something that looks like a higher high. I can't just jump into the trade thinking that it will continue to shoot up. No, that would be presumptuous and stupid. So we want to wait for a new trend. So meaning that this uptrend should end and maybe we will see a move to the downside. So let's see what the market does. Okay, the market obviously, like I said, kept moving up. So you can see low, a high, a low, then a high is currently forming. Now currently you cannot see, obviously we already have a higher high, but that higher high is still forming. Okay, we can't conclude yet that this is the last point of the higher high. No, until we see the market moving downward, that's when we say, okay, this is the last point of the higher high. I hope that makes sense, but it's very important to know all these things. So okay, the market is moving down. Boom, right there, the market has broken the trend line, and now we know we have an established low, established high, established low, established high. Now you can tell me now that this is the last point that the market moved to before pushing down, right? It's very important to know where the market moved to before pushing anywhere, so that you know the safe place to put your stop loss. If I want to enter this sell trade now, I'm going to put my stop loss here, because I know that if the market can come back and move beyond this place, then I know that trade is like, whatever I was thinking that make me to take that trade is false, or maybe that trade cannot work out again. I can't put my stop loss here because the market, the market is not stable. The news, a news or high volatility due to market open, market close, or maybe something can happen that will make price to fluctuate all this way. But I know that it shouldn't come here if this trade is correct. So now I'm going to place my trade. Let me reduce this thing so it will not be too big. So let me just use a tool here to represent my trade. Short means now I'm not going to use market execution. Okay, I'm using sell stop, meaning that I want to enter this trade if the market continue to break the low of this candle, right? That's when I want to enter the trade. I don't want to enter the trade immediately at the current market price. No, I want to know that yes, this thing is truly going down before I enter the sell trade. So let me set my stop loss properly here. It is to somewhere there, and now take profit. Okay, so we have to, our strategy demands that we open 2 trades just to help us in our risk management. So I'm going to first of all go forward 1:1. So we are going to assume that we have placed 2 trades, and we are going to assume that we placed 2 trades. Then this is one of those trades. Okay, 1:1, 1-to-1 risk to reward. So you risk $100, you are making $100. You risk $50, you are making $50. You risk $1, you are making $1. So it's very simple. Then the second trade, we will try and close it when we can see that it's as if the market can no longer push in our favor. Now there's a disadvantage with that, because you may lose some profit in the process. The best way is to set a fixed fixed take profit, but we don't know how the market will move. Sometimes it will move very well in your favor, sometimes it will not move very well in favor. So that's why our first trade is 1-to-1, and our second trade we will see how the market is behaving to tell us whether to stay in the trade or get out of the trade. So let's see how this will do. Okay, market is moving in our favor. Okay, you can see that the market is consolidating. Now something that I learned a long time ago is that the market usually is to copy whatever is on the left hand side. You can see here that the market moved freely up and moved freely down, but you can see here that the market moved sideways here. So when this market also came here, it started moving sideways. So because you are in a trade and the market started behaving like this, doesn't mean maybe something is wrong with the trade. It's just that the market is not yet ready to move. So we are going to calm down with this trade, because we know it still has enough potential to move. So currently, let's see what is happening. The market came from a high, a low. Now the market is as if the market wants to make a high. We can see currently that this is the last point that the market will move to. We can't call this our high until the market start pushing that, then we will say this is our high. So okay, you can see the market have started moving down. Now as I'm in this sell trade, I'm also at the same time preparing myself for a buy. Okay, yes, the market is moving in my favor to the downside, but I'm always alert, or let me put it this way, we should always be alert that okay, if this sell trade should end at any time, I want to enter into a buy. That's just what it takes. That's what it takes. Just to make this money, you have to be at alert to change direction at any time. So I know that according to our strategy, I already have a high here, I have a low, I have another high here. So I'm going to draw another trend line that the market is going down. Okay, so I'm going to draw another trend line just like that. Boom, just like that. So let me remove this trend line. We don't need it any longer. The market is now moving down. So let's see how the market continues to perform. Okay, now this I'm not really worried about this. Okay, this does not mean that the trend line has been broken. Okay, this doesn't mean that the trend line has been broken, because if you see this candle is a range candle. Let me zoom in very well. This candle is a range candle. It took out the low and it took out the high. Anytime you see a candle that take out the low and take out the high, it's like that candle does not exist. Okay, it's a range, it's a wild range, so I'm not considering it at all. Okay, that's what I learned along the way. I learned a lot of things along the way, so just bear with me. If some things are sounding strange to you, just watch it. You can research about them, just to gain more knowledge yourself. So let's see, confidently, let's stay in this trade. You can see that the market resumed its momentum to the downside, because I already know that this candle here does not exist. Like maybe this is a Sunday or something, that this does not exist. So currently you see that we have a high, a low, a high. Now this is not a high, so I'm not going to count this as a high. So I have just a high, a low, a high, then my low is forming. I'm not going to count this nonsense that happened here. Like we said, the forex market is heavily manipulated. Weird stuff used to happen. So let's see how this trade continues to perform. So we already have 1-to-1. The market keep pushing down. We already have 1-to-1 risk to reward. So we know that our first trade has closed in profit. So what is left now is our second trade. Let's remove these so that there will be clarity on the chart. So our second trade now, we are thinking of, okay, when will we close that second trade? Okay, the market seems to be reversing a little bit. Boom. Now what happened there is the market went from this high to this low to this high and successfully made this low. Then the trend line got broken. You can see here this candle opened from here and broke the trend line. Now this is what I will do. Our second trade is still open, right? I'm going to say, okay, I'm going to trail my stop loss to this place here. Okay, I failed to mention that time that we were in the trade. The moment the market made this high, this low, this lower high here and continuing, we will have traded our stop loss here. You understand? So now I'll trail my stop loss to this, or I'll just close the trade, because obviously I can see that the trend line is broken. So I'll just close the trade. Now the reason why I'm saying that if you want to close the trade manually, you may lose some profit, is that you can see that the market move here, and as we have lost all this amount of money. You understand? So if you know your mind can handle losing some small amount of money, then you should try and close your second trade manually. If not, then maybe you should just close it anytime you feel like closing it, or maybe you set 1-to-1, maybe you close both of it at 1-to-1, or you make the second trade to be 1-to-2 or something. But I feel this is the best way to exit a trade, because now I know that this thing has broken my trend line, may no longer move downward. So I'll close my trade. Even if it continues to move downward, it doesn't really matter. Okay, so now we have closed our second trade. Now let me enter a buy. Now I'm saying now too much. The thing now is that this trade that I'm entering, I'll put my buy stop somewhere above here, so that I will know that if this trade will move in my favor, it will first of all break the high of this candle before moving in my favor. So here I'll put my stop loss below this low here. Make sure you give some gaps. So we open two trades. The first trade we expect it to move to at least 1:1. Somewhere there. Now let me explain something. Now you can see that the market has moved down, right? Now the market is about to move up. Now this move up can be a retracement of this move. It can just be a small retracement for price to continue going down, or it can be a reversal. Hope you understand what I'm saying. This break of the trend line does not mean that the market will start shooting up. It can mean that, okay, maybe this will be a small retracement for the market to keep going down, or it can be a reversal. Knowing that these are the possibilities, I'm going to still take this trade. The reason why is that we never know if this move will be the reversal of this move down. We don't know if this move up will be the reversal of this move down. So if it will be the reversal, I want to be in that trade. If it's not the reversal, well, I can take the loss. Okay, so far I can handle the loss. Hopefully I will see that the trade is no longer moving in my favor and get out before having a complete loss. So there's nothing wrong if you have a partial loss, as long as you can detect that the market is no longer moving in your favor and come out of that trade. So I've already said, let's see how this market will behave. So I expect the market to make a high, make a low, make a high, and keep going in our favor. So you can see the market is retracing. Okay, it's going back up. Okay, now what are we seeing here? We have seen the market move up, move down, move up. So we can draw our second trend line because the market have started moving up. So why are we drawing this our second trend line? I'm sure the answer should be very clear to you, because we know that this move to the upside can end at any time. Okay, this move to the upside can keep going, which will give us a lot of money, or can just end now. We will sustain a small loss here, but we'll be able to take the opposite trade. So let's see. The market is showing a lot of weakness to the upside there. You can see the market is going sideways here. Then the market resumed moving up. You can see the market move from this low, made a high, made a low. This looks like the market is not done making a high here. Okay, because this is an inside bar here. An inside bar is a range. Okay, you don't call this a low. This is not a low here. This is an inside bar. Remember this candle here that broke the high and the low is also a range. So you have two types of range. You have a candle that breaks both the high and the low, it's a range. You have a candle that fails to break either the high or the low, it's also a range. So you don't count them. So what I have here is a low, a high, a low. Then this is not yet a high. A high is still forming. Okay, because all this nonsense here is just a range. So let's see if the market will keep pushing in our favor. Okay, the market is not pushing in our favor. Okay, yeah, but our trend line has not been broken. So let's see if this trend line will still hold. Oh my god, you can see right there the trend line has been broken. So we lost. Now if we have invested $50 on this trade, I think we lost about half. That will be minus 25 now in your account. It will be red. You'll be like, hey, whoa, I don't lose money. So let's close this trade with a loss. You close it immediately. Then I want to be in this trade. Okay, I will not just wait and be looking. I want to be in this trade because the market has shown me that it's no longer moving up. Okay, so I want to short this market, and I'm not going to enter by market execution. Okay, I'm not going to just press sell. No, I'm going to sell a sell stop. All these practices are good. Okay, they ensure that you are trading step by step. You can see right here, since the market have already moved far from here, my stop loss is set here, and at least I should get 1-to-1 initially here. Let's see, 1-to-1. Remember, we're opening two trades, so initially we want to get at least 1 to 1. So boom, if this market will continue pushing down, it will activate our sell stop and keep going. So yeah, so let's see how this will do. Market keep pushing down. Okay, the market seems to be retreat. Okay, continue going down. So yeah, our 1 to 1 has been served. Then our second trade is still on. So let's draw our trend line. We're going to draw our trend line again because we know that the market can see this candle here. It broke both the high and the low, so I'm not going to consider it right there. So I drew my trend line. This trend line is no longer useful. Delete it. Now the market is going down in our favor and we are still in this trade. So let's see what we have. We are moved from a high, we made a low, made another high, we made a low. So from here, let's see if the market will end. Okay, the market has not ended. Now it's time to update the trend. Okay, yeah, I think we will update our trend line. You know, we started from here, right? A high, a low, a high, a low. That's a complete cycle of a trend. Now another one is starting here from this: a high, a low, a high, a low. So you always draw your trend line to the most recent two highs or two lows. So this is the most recent high, low, high. So you join. If you're in the downtrend, you join two highs together right here. So we update our trend line. So we are still in profit, mind you, we are still in profit. So the market seems to be retracing. Okay, ranging. Okay, now let's see what we have for the I conclude. We have a high, we have a low, we have a lower high, we have a lower low. Now even though we have broken the trend line, I'm not going to rush into this trade because the market is obviously moving sideways. I want to see momentum in my favor first. Okay, right there you can see that the market, if you look at this candle very well, let me zoom close. See those candles that you're looking at, they all have meaning. Look at the reason why I didn't enter. Look at this candle here. It didn't break the high of this previous candle and it didn't break the low. So I can't be entering when the market is ranging. This is a range candle. Look at this candle too. Did not break the high, did not break the low. It's a range. Look at this candle too. This red candle. It didn't break the high, didn't break the low. Look at this candle too. This green candle. Didn't break the high, didn't break the low. Until I have a candle that gave me, see this candle very well. It respected the low and it broke the high. So this is at least showing me that okay, the market have started moving. Before it was just going sideways. So pay attention. Don't worry, we'll be assisting ourselves on the group. We'll be doing the analysis together. But for now, always pay attention to the candles to know when to enter and when not to enter. So now I want to enter this buy trade because obviously the market have stopped moving to the downside, and you know that we are still in our second trade is still on. I have not closed it too. So I will now move. Oh, I even forgot to say. Remember I said about what I said about trailing. When the market move here, move here, move here, you will have trailed your stop loss. You will have trailed your stop loss. So I will now move my stop loss to here, to where my entry for the next trade will be, so that it's either I close it immediately or move my stop loss to here, just to let the market close it by itself. But realistically, I would have closed the trade when the market broke my trend line. I will have closed that sell trade. Okay, so now I set my buy stop above this high so that if the next candle break the high of this candle, it will trigger me into the trade. So I will take, let me set my stop loss. properly below here. So let's see how this trade will go. Okay, so we'll set our 1-to-1, right there. So let's see how this trade will go. Looks like a powerful trade. Okay, we are retracing. Now I'm not really worried if I see this happening. Most people will be worried. I'm not worried. Why am I not worried? Look at it. After this high low, we went from this low here, and looks like we just make a high. So why would I be panicking when the market just made a low, a high? I know somehow there will be a higher low and a higher high. It doesn't happen all the time. This market can just keep going down and come and take your stop loss. But you have to trade based on probability. If you know that your trade still have a chance, holding it is not a crime. You understand? Just hold it a little bit and give your trade a chance. Obviously, this trade has not even given us 1-to-1, so I'm not in a hurry to come out of this trade. I know this is a low, this is a high. Probably we'll have a higher low here and a higher high. Or the market can even come here to give us a higher low and a higher high. Whatever happens is what happens. Okay, you can see immediately the market moved up and we already take profit on our 1-to-1 risk to reward. So we'll close that. We're in a second trade. So now that I have my low, I have my high, I have my higher low, and looks like a new high is forming. I will draw my new uptrend line. Okay, I'll draw my new uptrend line and boom, right there. So I can delete this trend line. So now I'm looking to take as much profit as I can take in this market before this trend ends, because the trend will not last forever, or before the market start ranging. Know that the market will not be trending all the time. We have been buying, we have been selling, we have been buying, we have been selling. The market can first of all give you a buy and fall into a sideways range that will last for maybe 2 days, or the market will give you a sell and will last for maybe will fall into a range. So this one that we just sold and we are buying doesn't always happen. The market can sell and fall into an erratic range that nobody will understand. So the thing is, just whenever you expect, let's say you expect the market to move in a particular direction and it start misbehaving, just maybe ignore that chart for that time, so that you will not be placing trade and it will be stopping you out, placing trade and you'll be stopping you out. So let's see how our second trade will perform. Wow, I'm moving up here. You can see why sometimes it's good to hold your trade for a while. Don't just be in a hurry to come out of your trade, because that's how you can make money. If you're always in a hurry to come out, how will you make the money? So you have to have that patience. So you can see here we have a low, we have a high, we have a higher low, we have I think we are still forming the higher high until I see the market moving down. That's when I'll believe that the higher high has been formed. Okay, that's the logic. So you can see market is still okay. Now the market have started coming down. Okay, now if you open your charts and you see the market making this side by side up and down movement, what does that mean? The market is going sideways. Okay, you want the market to be going up like this, but you see, moving down, moving up, moving down, probably to move up again. You see what I'm saying? The market is moving down, moving up. So if I see this behavior in the market, let me tell you what I will do. When I see side by side, up, down, up, down, up, down, I assume even though I may not be right, I assume that the market have started ranging and I'll just box it up. I want the market to come out of this nonsense. Then remember that we are still in a buy trade, and I said we will look at conditions that we let us know when to close the trade manually. This is one of those conditions. The market have started ranging after an extensive uptrend it started ranging. So I'm going to close somewhere around here. I will have closed my second trade. I've already made a lot of money, maybe 1 to 1 or 1 to 2 or 1 to 3 safe. Let's check safe. Let's check how much we have made before that range started. So I think we entered somewhere here, all right, and we set our stop loss. This thing is not easy to control. So where's our long position here? We entered somewhere here, and stop loss was somewhere here below there. And now if we have come out somewhere in this middle here, we will have made roughly 1 to 2 risk to reward. Roughly 1 to 2 risk to reward is what we will have made, which is nice. This is for the second trade though. The first trade is 1 to 1. Okay, the first trade will have closed it somewhere here, 1 to 1, 1 to 1. You can see risk slash return in these 2 years. Risk slash return. So that 1.03 is what I'm looking at, meaning that for your risk, you have a return of, your risk is constantly 1. You understand? You have risk 1 and you have a return of 1.03. Okay, so if we close around here, you risk 1 and you have a return of 2.03. So I think that will be the end of this simulation here. You can rewatch just to get the idea of the strategy, so that maybe starting from Monday we will all be doing our analysis together. Now keep in mind that we will not only be trading AUD USD, but AUD USD is good. Is a good start. Okay, as time goes on, when we get into other currency pairs like Bitcoin or BTC USD, gold. Although no, I'm not going to trade gold, because gold, that gold used to misbehave too much. It's unpredictable. So maybe BTC USD, something like GBP, JPY, something like crude oil. We will look at other financial instruments and also start trading them, so that if we are waiting for our strategy to appear on one, our strategy might have appeared on another one, because this strategy that we're trading, all these candles here are for 4 hours. Okay, so you can, this trade that we just took here, let me even see if I can measure it. This trade, let me see if I can measure it from here that we started trading till around somewhere here that we close. This is 16 bars. Okay, this is about 16 to 17 bars. That's 4 hours times 17. That's several days. So we were in this trade for several days, maybe 2 to 3 days or 4 days or something. I think maybe 2 to 3 days. So it takes time to form, and we have to be patient. Also, by looking at other currency pairs, we will be able to see other opportunities developing on other chart. So, all right, stay safe. Bye for now.